Hey everybody, welcome back to the channel. I have got a crowd favorite back, a good friend of mine, Andy Schectman. How are you doing, brother?
Chris, I'm great, dude. Good to see you, man. On this holiday weekend, there ain't many people that I would jump on a holiday weekend for, but you are one of them, and it's an honor to be here. So thanks for having me back, man.
Well, I appreciate you coming on, and I know everybody else does too. And there is quite a bit of precious metals news to talk about. And we were going to talk about deliveries off of COMEX. You watched that pretty close. And
Yeah,
gold outperforming traditional assets. There's a couple questions we like to cover right off the bat.
yeah. Well, I mean, let's start with gold's performance. And I think it's one of these deals, Chris, where people just miss it. They miss the fact that it's like the old story when we were kids, the tortoise and the hare. And the hair is the sexy thing. It's Nvidia, it's Bitcoin, it's Apple, it's things that get mainstream media attention. It's things that move in a way that I've been doing this for 35 years almost, and Richard Russell was a hero and a mentor of mine, brilliant man, and I read him every day for over 2 decades. And he would say, if you make 7% per year, you are a rock star. And this is a man who at the time had been writing a daily newsletter for going on 60 years. This guy that was just brilliant. And I think when we look at market psychology over the past several years, it's the get rich quick mentality. It's why casinos keep springing up in Vegas. It's I can do this. Look at what they did with Bitcoin and Nvidia and Apple. And yeah, those are really impressive gains, but they're the outliers. In fact, like if you look at something like the Russell 2000, which is a broad measure of the economy, most of those stocks are down. If you would have bought a whole big swath, call it 20 NASDAQ stocks without taking NVIDIA or Apple, you'd be down since the beginning of the year. So it's just a handful of stocks that are leading the way right now. But when we talk about on a broader perspective, most people would say, well, gold, it's a barbarous relic. It doesn't pay any interest. What the hell would we want that for? If we go back to January 1st of 2000, Chris, gold was $274 an ounce, and now it's 2,520. That's a gain of 830% or so. You take a look at silver on January 1st, 2000, it was $5.30. And, with it just under 30%, that's almost a 500% gain. And it's done so very quietly without the fanfare. Gold has outpaced every major asset class with the exception of Bitcoin since the beginning of the century. The S&P 500 with dividends reinvested has averaged about 9.6% per year compounding, where gold's 9.9%. And so when you talk about the slow growth of gold that goes unnoticed, it's amazing. I mean, and a lot of it has to do with price and rhetoric suppression on the Western markets where people don't notice it. But indeed, there has been really nothing in traditional assets that rivals gold. It's doubled the performance of the 10-year treasury. At the same time, the part of the 60-40 portfolio, that 40% that's supposed to be, so safe when we talk about, just what does that mean? And really, it hasn't been that safe. And when we talk about where we are now, it's continuing to happen. You got gold up right now about 8% up through the summer here. And you annualize that, for the summer, it's a 30% plus pace. And I think people don't understand that. I don't remember in my career a summer that's been as bullish for gold as this one has been. In fact, you're talking about for the past this entire summer, you look at the gold futures positioning, it's been really bearish with the commercial banks shorting, and on the short side of the trade massively all summer long. You see the American stock investor who has been enthralled with AI and selling their exposure to precious metals. You've seen a strong dollar and positive real yields, and all of that together, this has been gold's fifth best summer performance in the past quarter century. And so this is a big deal. I mean, and people are not noticing it. In the past 25 years, there's only been 4 other summers where we've seen anything that even rivals what we're seeing right now. And, I think it's one of these deals that the longer it goes unnoticed, the more bullish it becomes. And, when you take a look at look, for the first time ever, a 400-ounce gold bar is over $1 million. But let's put that in perspective. In 1971, that 400-ounce gold bar would be $14,000. In 2000, it would be $115,000. And today it's $1 million. And in 1971, that $1 million or $14,000 was 400 ounces. In 2000, it was 49 ounces. And today it's 6 ounces for $14,000. The cost of that 400-ounce bar in 1971. And so when you talk about, is it gold that's gone higher, or is it the dollar that's gone lower? And we'll put that in context again. Return over the past 4 years, the 60-40 part, the U.S. Treasury on average is the 30-year Treasury is down 40% over the last 4 years because of rising interest rates, versus commodities such as gold and silver, just the entire commodity index up 120%. And so it's a situation where things are beginning to change. And I think that is something we notice in the central bank acquisition of gold and silver. And that is no better evidence than through the deliveries off of COMEX. In terms of silver, the deliveries just 3 days ago, amounted to 3,830 silver contracts, or 19,150,000 ounces. And, that's about as big of a delivery as we've seen in a very long time. Who the hell's got the kind of bread to take possession of 19 million ounces of silver? And this is something that continues to go unnoticed by the mainstream. And how about gold, right? 4,142 contracts stood for delivery just a couple of days ago, the beginning of the September contract. That's the highest delivery we've seen in 2.5 years. That's 12.9 tons of gold. So the world, the central banks of the world and the sovereign wealth funds are using the way that the West suppresses gold, thank you very much, to stand for delivery, which speaks to the bullishness. And when you put all of this together, Chris, and see the price keeps going higher, and the demand for delivery keeps going higher, at the same time, according to all these facts, the American investor is asleep at the switch. They have been selling. You look at the ETF participation falling at a 45-degree angle, positive real yield, if we believe the nonsense coming out of the Bureau of Labor Statistics when measuring inflation versus the yield on the, let's say, even the 2-year Treasury, and a strong dollar. That should be the death knell for gold, and yet it continues to go higher and higher and higher. And the demand for delivery to remove counterparty risk keeps getting stronger and stronger and stronger. And this is one of these deals where the big money, the ones who write the script, know the playbook. This is under the cover of the Western stupidity, and the media, who doesn't tell us anything, is emptying the shelves. As you can see, massive deliveries, 19 million ounces of silver delivered in one day, and 12.9 tons of gold in one day. Who's got this kind of bread? Where's it going? And these are things people need to start and think about as we watch the Western shelves being emptied by the most sophisticated investors on the planet.
It's funny you mentioned it's kind of going unnoticed, guys. We're hitting all-time highs in gold. You said it had a good summer. Yeah, I'd say so. Gold is really starting to show out. It's doing what it's supposed to do. Actually, it's not really showing out. It's just doing exactly what it does. How far is silver behind gold?
You just said, I just want to comment on one thing, because look at it in terms of Japanese yen. That's the best way to underscore what you just said, right? So 10 years ago, an ounce of gold in yen was somewhere in the neighborhood of 140,000 yen, and today it's in the neighborhood of 360,000 yen. So did gold triple in Japanese yen, or did the yen fall? And it didn't fall. And it's that the currency from which we measure it fell. So the yen got weaker and gold just hung there. And that's the most important thing to understand, is that gold did what it's supposed to do in yen, and it preserved its purchasing power as the yen from with underneath it, in which it was being valued in yen, got clobbered. And that's the same thing we see in that chart that I read to you. Again, in 1971, $14,000 worth of gold was 400 ounces. In 2000, it was 49 ounces. And today it's 6 ounces. So did gold go higher, or did the dollar that measures that $14,000 worth of gold get its ass kicked? And just think about that. You know, people say, well, it doesn't earn any interest. So let's just say your parents, Chris, were deciding, what do we do with the 400 ounces or the $14,000 we have in 1971? I don't know how old you are, but I bet you were born somewhere in the 70s. I would think. I'm not sure. I was born in 1970. But anyways, the bottom line is, we can use me as an example. In 1970, my parents could have said the same thing. We got 14 grand. What should we do? You know, even though you weren't allowed to own gold until 1974, let's just pretend that you could. Well, let's buy Andy 400 ounces of gold and stick it under the mattress, earning no interest. That's $14,000. It'll earn no interest. And here we are 55 years later, nearly 54 years later, with nothing but dust earned on that gold. And that $14,000 worth of gold, those 400 ounces, is worth $1 million. Now, was it the price of gold that went up, or did the dollar go down? And just think about what $100 is worth in 1971 versus what it's worth today. And these are the things that people need to understand. And what you said there couldn't be more true.
We're going to denominate things differently later on. People, I don't know. I ask people everywhere I go about inflation. Oh yeah, everything's so expensive, and it's like, well, it is, but it's the dollar buys less. It's real simple. It is hard to uh, think about as you're going through day to day life. Silver's known to get behind gold just a little bit. Kind of, I can't remember if it's David Morgan or who said it was like a yapping dog on a leash, and it'd kind of get behind and it would shoot way ahead.
Am I able to share my screen with you?
Yes, sir.
So I want to show you something, if I can. Let me see if I can find it here. Yeah, here it is. So I'm going to share my screen and show everyone what's going on with silver, because I think, do I do present? I think that's what I do. So share screen. Let's see if it'll let me do it. And oh, here we go. All right. Tell me if you can see this. You see that?
Got it.
All right. So I'm going to tell you what's going on with silver. If I can find the dang thing. This is a presentation that I gave. Here we go. This is a presentation that I gave at Rick Rule's conference. And to me, if you're wondering what the hell's going on with silver, this is all you need to see. Then I will give credit to John Little of the Pickaxe for turning me on to this particular slide. But I've been talking about silver in military use for a long time. I gave a presentation 2 years ago in Vancouver where I said there's 500 ounces of silver in the tip of a Tomahawk cruise missile. And at the end of my speech, a guy came up and said, son, I work for the DOD. I'm a consultant, and I actually helped design the Tomahawk. And there is indeed some silver in it. Don't know how much. I'll let you know. Didn't hear from him again. Came back earlier this year in January, did the same presentation at Jay Martin's conference, Vancouver Resource Investment. And he came up to me after with a stack of pictures. And he said, see here, you remember me? Here are the pictures from when we were test firing the Tomahawk. It had a hard time shooting up vertically. It was meant to come out of the tubes of a torpedo. He says, this is all declassified. Don't worry. He says, but yeah, you're right. There's between 13 and 14 kilograms in the tip of a Tomahawk. That's 500 ounces, Chris. But here's what I want people to understand. All right. So let's go back to 1942. If you Google S.2768, you will see that this was a bill that was presented at a Senate subcommittee meeting, right? And in October of 1942, a bill to authorize the use for war purposes of silver held or owned by the U.S. And I'll just read the first couple sentences here. The present consumption of silver for war purposes is at the rate of about 100,000 ounces a year, and it is growing rapidly. And according to the War Production Board, it is only a matter of months before war demands will have increased sufficiently to require at least 200 million ounces of silver per year. Now, that's 1942. Now, you tell me, how much more sophisticated is our military equipment now? And the stealth fighters and the submarines that are nuclear, and the silver is massively needed. I have a client who works for United Air, and he says, he's a mechanic. He says, you wouldn't believe the amount of silver soldering pieces that we use all throughout the aircraft. All right, so keep this in mind. 1942, evidently we need 200 million ounces of silver. Well, look at this. This is the supply-demand table from the Silver Institute. Now let's just focus right here, okay? All right, here's the demand. Right here, you see, we're 265 million ounces shortfall after 142 million and 100. So we keep ending up short. There's way more demand than there is supply. All right, let's look at the industrial demand. Represents 9%, electronics and electrical 9%, of which photovoltaics, that's solar panels, 20%, brazing, alloys, and solders 3%, photography -3%, other industrial 9%, jewelry 4%, silverware 7%. Well, shit, where's military? Isn't that interesting? We have a 260 million ounce shortfall, but no military. I mean, we had it right here, but we don't have it right here. And what's happening as a result of it? Take a look at this. This is a chart of COMEX, and the red line would represent the 4 biggest commercial banks that are short these commodities. The green line represents the 4 plus the other 4. There's 8 banks involved that are shorting all these commodities, primarily 8 Western commercial banks. Let's just pretend, for argument's sake, it's Bank of America, Citibank, Goldman, JP, Standard Charter, Deutsche Bank, and what's the other one? UBS or whatever. It doesn't really matter. There's 8 commercial banks, Western. Now look at this. Why would 8 commercial banks have the largest short position in any commodity ever traded in the history of the COMEX market? Look at crude oil. Remember when they were able to make it -40 a barrel? 2020. Well, you tell me why the hell would 8 commercial banks, here's 4, the red line, and here's 8, have the largest short position in any commodity ever traded in the history of the COMEX market? Because it's not here, but there it is. The military industrial complex needs silver to make high-tech weapons, to send them all over the world. And this is the short position on COMEX by 8 Western banks. And as a result, the central banks around the world know what we're doing. When the BRICS Grain Exchange was just founded a few weeks ago, the head of the BRICS Grain Exchange said, we produce more wheat than the West does, but the price is controlled on COMEX. And this grain exchange here in the BRICS, well, that'll put an end to that. The head of the Shanghai Gold Exchange in 2014 said, when China is allowed to speak at the gold table, the real price will be observed. Well, here's what they're doing. This is the LBMA. This is the most silver in one place in the world. And guess what? They're using the suppression of the paper market. This is why the rest of the world isn't bitching, because these countries were never motivated, sophisticated, coordinated, or wealthy enough to stand for delivery. And that is an option on both the LBMA and the COMEX. You can stand for delivery. Look at what they're doing. They're using the stupidity of the Western price. It's jiu-jitsu. Use your opponent's leverage against you to drain the system. So this environment right here, so that we can make the military industrial complex wealthy, creates this environment. So I'll stop sharing right now. But when we talk about silver, I just want people to understand that this is a bigger deal. And when you see China right now flying all around the globe as the second largest producer of silver in the world already, buying up from all of the Latin American countries, all of the doré and silver concentrate, unrefined, and sending it home to China to have it refined. They're going right to the miners, buying an unrefined doré bar, shipping it across the globe, having it refined in China, because it doesn't then get purchased off of an exchange or go through the normal refinery routes, or in South Africa and in Switzerland, that then would get cataloged and tracked. It's just they're buying the doré and shipping it home, and it doesn't come off an exchange, so the price isn't affected. It's invisible. And so you have the second largest producer of silver in the world gobbling up everything that isn't nailed down. And on the Shanghai exchange, they're pricing it $4 an ounce higher than the West to entice arbitrage. You have India, who bought 700 million ounces of silver over the past 3 years. There's only 800 million in the LBMA, of which 500 million belongs to the ETFs. There's only 300 million available for delivery there, and about 70 million on COMEX. All told, you have under 400 million ounces of silver off of the two major exchanges, and India has imported nearly double that in the past 3 years. China's buying up all they can. This is a game that will end really, really badly for the people who are on the wrong side of the trade at some point, probably on a Monday morning when someone isn't able to deliver, which would make me wonder, is this Bank of America? Because they have, according to multiple sources, have 1 billion ounces short in silver and out of 35, 40 million ounces short in gold. And Ted Butler talked about that for the last year before he died in the over-the-counter market. And if that's the case, and maybe is this why Warren Buffett is dumping his shares? Are they going to sacrifice one of the big banks at the altar to really freak people out and create a bank bail-in? And I don't know, but I will tell you that Bank of America, according to everything I know, probably has the largest short position in silver of any of the major banks, period. And look what's happening to the ability to get that silver if you have all of these naked shorts and it's disappearing and people are standing for delivery and Warren Buffett's getting out of Dodge. I don't know. Just makes me think that if they're going to sacrifice one of these big commercial banks to really get fear going, it's Bank of America, who God only knows what will happen to the silver and the gold price at that point.
What do you say to people that are holding paper? GLD, SLD. What do you say to that?
I'd say download the prospectus, read pages 6 through 12 titled Risk Factors, and if you don't sell it, I'll buy you a beer. I mean, really read it. Pages 6 through 12. Now, this is totally from memory, okay? Because I used to talk a lot about GLD. I would give a presentation called GLD or the Real Thing. And in the prospectus, which you can download, first of all, GLD is run by HSBC Bank and JP Morgan and I think BlackRock. SLV is 100% run by JP Morgan and BlackRock. JP Morgan, who paid a $920 million fine to the Justice Department, the largest ever, for manipulating the metals market, is the custodian of some of the largest gold and silver trusts on the planet. Seems kind of odd to me. SLV is the largest stockpile of silver in the world, and GLD maybe the fourth or fifth largest of gold. But in the prospectus, it will say things such as the custodian, which would be BlackRock and JP, reserve the right to use sub-custodians, but they do not reserve the right to inspect the premises of the sub-custodians where the metals are being held, and they are also not responsible for the errors and or omissions of said sub-custodians, and they are not responsible if the gold, for example, which is supposed to be London good delivery 400-ounce bars, does not meet that standard. In other words, if they're lead bars painted gold in some vault that they're not even able to go to, they're not responsible for the errors and or omissions. They can't visit the premise, and they're not responsible if those bars are fugazi. And if a fraud is discovered in the trust, they will halt trading and an investigation will ensue. And you will be paid at the end of the investigation at the date that the investigation ensued. So they could say tomorrow, oh shit, there's a problem, stop it, do an investigation. And 3 years from now, when gold's $9,000 an ounce, you get paid at the value today. Read the prospectus.
And that's probably their plan. Actually.
Yeah, well, you can't take possession of it anyway. Only those large institutions that funded it in the form of a basket, which is like, 20 million, 30 million, whatever it is. Average Jane and Joe will never take possession of it. It's a horrible product. They both are. You're taxed at the collectible rate as if you were selling rare collectibles. You'll never take possession of it. It's administered by crooks. And on top of it all, you pay, I think, a 40 basis point management fee. 100 basis points is 1%. So you're paying 0.4% of its value. If it's 100 grand, you're paying $400 a year each year to the custodian. So it's taking away from the performance of the fund. The whole thing sucks. Buy the real thing. And if all hell breaks loose, do you want stock in Kellogg's or boxes of Frosted Flakes? And so to me, GLD and SLV are really, if nothing else, just a cop out. And it is a poor reflection of own. In fact, if the government were to confiscate gold and silver, to me, this is the perfect vehicle. You come in, and instead of activating eminent domain and knocking on a guy like your door, a guy like you who believes in the NRA and maybe lacks the patriotism the way that it used to be in terms of the government's out for your best interest, they don't have to come knocking on your door and see your NRA sticker. They can just have SLV taken by JP Morgan, the crook who paid him almost $1 billion fine for manipulating metals, and have the largest stockpile of silver sitting right there. And the same thing with GLD, the fourth or fifth largest, look the world in the face and say, what? Well, we didn't confiscate anything. We just closed these two funds. You're allowed to own physical gold. We just closed a couple of funds and gave everyone how much, whatever their share price was worth. At the end of trading Friday, it's now in their money market today, here Monday. We didn't do anything wrong. We didn't break laws. We didn't infringe any liberties. So next. So that's to me, they're bad deals. And I would much rather own the real thing in my possession than have anything to do with those two funds.
It seems like it would be really hard for them to do the confiscation thing again. It seems like that would give other countries a green light to buy, hoard gold, silver, go. Let's buy it all. That seems like what would happen. It would do the opposite of what they tried to do.
Right. I agree. So instead, just take the ETFs, which they have the right to do anyway. It says in the prospectus, much easier, much cleaner. We didn't steal anything. We didn't activate eminent domain. We just closed these funds. Okay. So it's almost like, seems too good to be true. You create a couple of funds that all of the investment money gets suckered into, because if you think about it, a financial advisor, if you go to your financial advisor and say, hey man, I got $1 million with you, but I want 700,000 in gold. Well, I can't help you, Chris. Well, I'm going to cash it out then because I want to buy it. No, well, what you should do is buy GLD. You don't want to do that and have a risk and physical possession. And they're going to push you into owning these things because money managers make their commissions by keeping money under management. Now, not everyone would do that, but it would be human nature to find flaw in any argument that would take that kind of percentage of what they're making off of you, fair or not, off their table. And once it moves into physical metal, it's not going back into managed money. So yeah, it just seems too convenient, too obvious to not be noticed by the powers that be.
Yeah, Warren Buffett called it a rock that you pay people to stand around. And man, is he wrong? It's a metal for one. And it's just all the money managers I've talked to, because I quiz them. Actually, I was at the welding store the other day, and the guy that used to sell me welding rods is now a financial advisor. I called him, was like, hey, I'm going to come by there and pick up some. I said, oh, I don't work there anymore. Now I'm a financial advisor. It's like, wow, that's wild.
Now stop there for 1 second, because when you go to your doctor, you go there for a reason. You find something that you're concerned about, and you go to the doctor. You expect that doctor's accreditation is commensurate with his title, his work, all the time it took to get there. So for this welder, and I don't know him, I'm not going to speak
derogatory. No, he's a salesman. He's not a welder. He was just he sold welding rods.
Right, but the point of it is that to become the difference between being a welder or selling welding equipment and being a financial advisor is simply passing a Series 7 and another test. I think it's a Series 25, which is 100 or so questions on ethics, which I used to be one a long time ago. As part of what I was doing at Miles Franklin. This would have been in the 90s. I was licensed and I was a financial advisor. So, you study hard for the Series 7. It's a tough test. You study, you take it. Now you're able to sell stocks. You pass one other easy test, and now you're a financial advisor. The CFA, which is a series of 3 tests over a few years, well, that's different. And there's only a couple of those in every brokerage. But typical financial advisors, are they really accredited? Are they really educated enough to understand. And most people, most of them, learn more and more about less and less till they know everything about nothing. So the people watching your show who have been, who you have talked to about expanding their mind and seeing bigger things that are happening on a macro scale, in many cases, Chris, are probably more inclined to understand where things are going than someone who is focused on a mantra of traditional assets. And the reason that people feel that way is that since 1982, if you look at interest rates, they've gone down like this. Well, now they're changing, but in an interest rate falling environment, as interest rates continue to fall, stocks, bonds, and real estate look real good. The values go higher and higher and higher. What's a house worth at 8%, 5%, 3%? You can buy a bigger house at 3% than you can at 8%. That's almost 3 times the cost of money. And so the value is going to go up, and your bond portfolio, as rates go down, the value of bonds go higher. And, you know, it makes it easier for stocks to reinvest or even buy back their shares or take that money and reinvest it in you know, infrastructure and in ingenuity and all of these things. But when rates aren't going straight down, those traditional assets, just as bullish as it was, they will be the inverse of that. And especially as it pertains to a slowing economy that is up to its ears in debt. So this is a whole new game where the most, you know, best laid plans, so to speak, need to be reevaluated from time to time. This is one of those times.
Yeah, it's recency biased. You know, stock market only goes up, real estate only goes up. That's all we've known, so that's the way it is. But
Yeah.
I don't believe that. I just don't. I think it's criminal to try to talk people out of holding real money that God put in the earth for us to use as money. It's that simple. Why would you be against that? Why would anybody be against that? You know, it's strange to me to be so close minded as to say no, you don't want to do that. You better just buy, you know, these digits, and you can watch your digits go up. But when the digits go down and people want to retire, that's going to be it's going to hurt. It's going to be a very strange time. And you know, guys, were like I said, gold's hitting all time highs. We've got craziness going on. I mean, the president is a joke. He's 17 days in a row on vacation. You know, he doesn't know if he's washing, drying, or hanging out. There's wars all over the place, and precious metals do really good in a volatile environment. That's what I've known. Is that right?
100%. And you know, Chris, I mean, look, you know, people don't know this about you, but I've known you for a long time, and you were buying gold a long time ago, long before you were doing these YouTubes, and you're way ahead of the average person in terms of not being a follower. You do your own due diligence and act upon it, which is different than most people. And that's part of what you have understood, is that we are entering a period of chaos and uncertainty and volatility. And I don't want to put words in your mouth, but maybe that's why, you know, almost a decade ago when I first was meeting you, you were talking about precious metals. And so, yeah, that's exactly it. And to me, I would underscore it by saying that the most well-informed traders in the world are highly motivated in not only accumulating gold and silver, which has been record pace for the past 5-6 years of central banks, but also repatriation. I'm going to read just one quick thing just to give you an idea. Just a simple Google search showed that in the past year and a half, here are the banks that brought all their gold home from the Bank of England or the New York Fed. And the Bank of England is where people would keep their gold for years because it gave direct access to the LBMA. Like, for example, India bought 1.5 times the amount of gold it bought all of last year, which was a record year. In the first 4 months of this year, had it all shipped home, along with 100 metric tons they've held at the Bank of England since 1991. In the past couple of months, Saudi Arabia, Egypt, and a half a dozen African countries brought all their gold home from the New York Fed, which would give direct access to the COMEX. All of these countries would keep their gold at the New York Fed or the Bank of England because of the Western jurisdiction, Western rule of law, and direct access to the LBMA and the COMEX. So in the past year and a half, here's what we've seen. Germany This is all these countries that said, give us back our gold. Germany, Austria, Slovakia, Argentina, the Netherlands, Saudi Arabia, Hungary, Belgium, Egypt, Senegal, Romania, Nigeria, Poland, Ghana, India, Turkey, France, Serbia, Venezuela, Algeria, Cameroon, South Africa, Czechoslovakia. Those are just the countries that we've seen recently, amongst others. So when you talk about what gold represents, it represents something much more significant than it ever has in my life. It is money, it is wealth. And I think the most well-funded and well-informed traders in the world, the central bankers, really do understand this. And that's why you're seeing not only them buy it at a massive clip, more so than ever. In fact, the first 6 months of this year was the most central bank buying we've ever seen in the first 6 month period of any year ever, only beating last year's. And to see the repatriation of it, the removal of counterparty risk, in large part maybe because of the weaponization of the treasury market, where we have stolen $5 trillion in Russian assets because, we don't like what they've done. It's okay that we've given $260 billion to the Ukraine with no congressional oversight, F-16s and Stinger missiles, and the intelligence on where to fire it, but we don't matter. But if according to Janet Yellen on CNN, if Putin and Xi, it's okay that they're friends, but if Xi gives one penny to Putin for war, the U.S. will sanction their banks, their companies, and Beijing itself. So the world looks at us as being hypocritical, as being, tyrannical. And so they're selling treasuries, which, remember, gold has doubled the performance of the 10-year treasury for 25 years, doubled it, but it has no counterparty liability. It cannot be sanctioned. And so these countries are selling treasuries, buying gold, and bringing it home from the Western vaults, which is a very big indictment on the whole Western system. And ironically, over the past roughly 4 months, the volume in trading we've seen on the Shanghai Gold Exchange and the Shanghai Futures Exchange combined has exceeded that of COMEX, rendering the Shanghai Metals Exchange the number 2 most heavily traded in terms of volume exchange on the planet, behind the LBMA. This is becoming real. This is becoming legitimate. And Shanghai has silver price $4 higher an ounce than in London or New York, because any of these dumb traders, the commercial bank traders or whomever they are, who have the ability to buy in the West and deliver in China, are doing so. Right along with China buying up all the doré and concentrate in unrefined form, right along with them being the largest producer of gold in the world and the second largest of silver. This is a trend that we see moving to the BRICS nations, and he or she who has the commodities, it used to be he or she who has the gold makes the rules. I'd say it's he or she who has the commodities. And last part on that, just to put a exclamation point, China and the Eurasian continent produce 85% of all the green metals, the rare earths, and refined China 100% of them last year. 100% of all of the rare earths were refined in China. Now, how the hell are we going green when 85% of what we need to do so is in the Eurasian continent, and China is refining 100%? It kind of sounds like going out of the OPEC pot into the Eurasian continent flame, and once again, shockingly enough, not very well thought out.
No, to say the least. Well, guys, there was a few questions I want to answer real quick. We've been on for about 40 minutes already, and there's a few things that people ask over and over. If you could go over it real quick.
Sure.
Report purchases, report selling back. How does that work?
There's no reporting on purchases at all, ever. The only time there would be reporting would be if you paid with cash in excess of $10,000, like green cash, like this kind of cash, in excess of $10,000, or multiple money order or cashier's checks under $10,000 each. Like you could do a cashier's check for $1 million, no reporting. But if you did, 1,000, checks at $9,000 each, you're going to get reporting or in cash. But it's important to understand that that's retail law in this country. Well, if you went to to that welding store and you paid with $11,000 and $100 bills, they're supposed to issue you a Form 8300. If you go and buy, you go buy your whole family a new wardrobe at Nordstrom's and pay with cash, you get a Form 8300. That would be the same thing here. So, it's not just specific to precious metal. So you pay with a check or a wire or an e-check, there is zero in the form of dealer reporting. When you sell back, there are some things that trigger reporting. Let's go over them real quick. In gold, there are 3 coins and then bars. Bars in excess of 1 kilogram, 32.15 ounces in one trade, right? So if you had, 100 1-ounce gold bars, if you sell me 32, I don't need your social. You sell 33, I do. Now, in theory, you would never want to call the dealer and say, I got 100 bars and I'm not reporting any of it, so I'm going to, break it up. You don't want to say that. But you could call a dealer and say, hey, I got 32 1-ounce gold bars. I'd like to sell them. You call back a few days later. Hey, I'm going to sell another 32. You call back a few days later. I'm going to sell another 32. Legal, completely unrelated transactions. Don't tell the dealer what I don't want to know that you're trying to avoid reporting. And I just don't. And that's not you shouldn't give that onus to the dealer. Instead, if you sell under 32.15 ounces in one time in bar form, then no 1099 is filed. The coins that would trigger it on the 25th ounce, Krugerrands, Maple Leafs, and 50 pesos. That's it. Gold Krugerrands, gold Maple Leafs, and gold 50 pesos on the 25th ounce. Nothing else triggers dealer reporting, period. So here again, you could sell 24 Krugerrands today, sell 23 the next day, another 24 a few days later, 20 a couple days later. No dealer reporting. You sell more than 24 in one occasion, there is. So you could sell back as many American Eagles, Buffaloes, Kangaroos, Philharmonics, pre-33, Chinese Panda. None of that stuff triggers it. So it's a very small window. In silver, it's bars or rounds, generic rounds, not the coins, bars or generic rounds in excess of 1,000 ounces in one transaction, period. So you could sell 980 today and 950 tomorrow and 700 the next day. 1,000 ounces in bar or generic round form, or 1,000 face value in pre-65 silver. So anything under that amount, not triggering it. So you can sell Maple Leafs, even silver Krugerrands, not gold, but silver, old Morgan silver dollars, Philharmonics, Britannias, Kangaroos. None of that will trigger it. Just the rounds and the bars in excess of 1,000 ounces in one trade, and the junk silver in 1,000 face in one trade. That's it.
Well, thank you, Andy. And this is Stacy's number. She's a broker for Andy, and I bring Andy on. This is my gold guy. This is who I decided to go with back a decade ago or longer, and uh, we've never had a bad transaction. And you always had somebody that was looking after you. And I knew Stacy would be really good at this, and she is. She looks after all of my affairs, and she'll help you as you have these kind of questions. But she kind of wanted to say, tell Andy to answer this question. She gets it a lot, and she's going to tell you the same thing, but she'll just guide you in the right direction. And she'll also give you the price list. And you need that to shop around. You need that to know what kind of deal you're getting. I tell people all the time, get 3 bids. Don't ever go with the cheapest one. With everything we do, we get 3 bids, and you'll have something to go off of. So if you'll text your email to that number, that's her cell phone.
Well, that's the important part too, Chris, to mention, because the price list that we keep is way better than what you see on our website. We specifically do that for a myriad of reasons, and we only do a little bit of purchasing, able to purchase a little bit on the website. But if you request the price sheet from Stacy, you'll find that the prices are amongst the best in North America, and certainly better than what we quote on our website. So I just wanted to add that. And I, again, it's an honor to work with you and Stacy. And, like you say, you've never had a problem. We've never had anything but glowing reviews from our customers who have worked with Stacy. So please give her my regards, and you have nothing but my utmost confidence in the way that you guys conduct yourselves.
Absolutely, Roy. Well, thank you for that. And Andy, I want you to have an awesome day. Thanks for coming on, man. I know it's Sunday, and it's always good to have you on anytime. I'd love to have you back.
I always say we should do this more. I like the way that you do things and the way that you look at the world. And like I said to Stacy not too long ago, if more people were like you guys, this would be a much better world. So give her my regards. I hope you and everyone else out there has a great holiday weekend. And, Chris, I know that we should get together more, especially over the next couple of months, because I have a feeling that things are going to start to get real interesting. And as I often joke about, and maybe it's not even a joke anymore, that's a Chinese curse, may you live in interesting times. So I kind of liked it when it was dull and boring and slow summers and everything, where you get out and do whatever you want to do and not worry about the world falling apart behind you. But I'd rather see what's coming and have a chance to get out of the way of it than get run over by it. So thanks for letting me drop in, and I'll look forward to picking up where we left off.
Proverbs 27:12. The prudent see danger, take refuge. The simple keep going and pay the price.
Yeah, that's exactly it. 100% couldn't have said it better myself. So let's do this again and pick up where we left off real soon and see what's going on.
All right, brother. Later. Guys, have an awesome day. Bye.
Thank you.